Hello, all you wonderful people, and thank you for clicking. We love you all. Today's video will talk about the concept of taxes in medieval Europe, or how the state raised funds. During medieval Europe, the concept of income taxes as we understand them today did not exist in the same form. The taxation systems during this time varied greatly depending on the region, ruling powers, and specific historical periods. It's important to note that the following information provides a general overview and does not cover all nuances or exceptions that may have existed. 1. Feudal obligations. The feudal system was prevalent in medieval Europe, where land was owned by lords or nobles. Peasants and serfs worked the land and owed certain obligations to their lords, which often included providing labor, goods, or a portion of their agricultural produce. This system allowed lords to extract resources from their subjects as a form of taxation or rent. For example, in England during the 12th and 13th centuries, serfs owed labor services to their lords, such as working on the lord's fields for a certain number of days per week. Then in France, during the 14th century, serfs were obliged to provide labor and goods to their lords, including working the land and giving a portion of their agricultural produce as rent. 2. Royal revenues. Kings and monarchs relied on various sources of revenue to finance their activities. These included fees, fines, tolls, and levies imposed on trade, commerce, and specific activity. Monarchs often granted privileges to certain groups, such as guilds or cities, in exchange for financial contributions. Additionally, they could levy special taxes during times of war or for specific purposes, such as for public infrastructure. For example, in the Kingdom of Castile during the 15th century, monarchs levied a alcabala tax on various goods bought and sold within the kingdom. 3. Church tithes. The medieval church played a significant role in society and collected tithes from the population. Tithes were mandatory payments equivalent to a portion, usually 1/10, of an individual's agricultural produce or income. The funds collected were used to support the church and its activities. 4. Custom duties and tariffs. Trade and commerce were important sources of revenue for both local lords and monarchs. Customs duties and tariffs were imposed on goods entering or leaving certain territories, often collected at ports or other designated checkpoints. These taxes were primarily intended to control trade and generate income for the ruling powers. Like in the Republic of Venice during the 14th century, the city-state imposed customs duties on goods passing through its ports, generating significant revenue for the Republic. 5. Indirect taxes. Some forms of indirect taxes existed during the medieval period. For example, taxes were imposed on goods such as salt, wine, and other luxury items. These taxes were often collected at points of sale or production and were designed to generate revenue for the state. For example, in medieval Florence, Italy, during the 14th century, a tax known as the gabella was imposed on various goods, including wine, salt, and spices. It's important to recognize that the taxation systems during medieval Europe were highly localized and varied significantly from one region to another. The exact mechanisms and rates of taxation were subject to the specific laws, customs, and privileges granted by the ruling powers. Additionally, the feudal structure and obligations played a fundamental role in the economic relationships and the extraction of resources from the peasantry. I hope you enjoyed the video. If you can like and subscribe, it would be greatly appreciated, as it really helps out our little channel. Have an awesome day!